A very good evening to all of you, and welcome to Stock Durbar with Team William O'Neill India. I'm Rushit Sejpal, equity analyst. So we'll just wait for some 30 seconds before we start today's session. I think there are a few participants who are still joining, so let's give them some time. And then we start as usual with the Nifty setup. I hope my voice is clear and you are able to see the screen, Nifty's chart, and also the annotations. Just one or two confirmations. Perfect, thanks. Thanks, Murli. Okay, so let's begin the session. So the RBI came up with its MPC decision today, and there was a clear statement from the governor that this is a pause and not a pivot. So that's what I was trying to relate it with the market. I hope market doesn't say us that this is just a pullback and not a rally. So let's see how the things phase out. But if you look at the Nifty setup, that looks quite good. So after forming a bottom somewhere in the first half of the March, it has gradually moved higher. There was no sudden spike. There was no big sharp rallies coming up. But yeah, in fact, this one was there when Nifty reclaimed its 21 DMA with a gap up opening. So since last 5 sessions, we are closing in the green. So this is the 5th session. Couple of positive things over here is that we are closing in the upper half of the day's range and mostly near the day's high. So this is what I always look for, and that's what William O'Neill has always said, that this is something you need to look for. Not only the index, whenever the stock is closing in the top quartile, at least upper half is good, top quartile is very good, and near the day's high is excellent. So this is what you need to look for. So last 5 sessions have been very good as far as the closing is concerned, that the closing is in the top quartile or near the day's high after a decent rally. Okay, that's one thing that's positive. Secondly, the index has moved above all its key moving averages. Firstly, it reclaimed its 21 EMA, the green line over here. This is the 21 EMA, right? Then in the yesterday's session, or maybe a day before that, yes, Nifty moved above its 200 as well as the 50 DMA, and today's closing was very good, and the index was above both the key moving averages. So this is positive. Now, what is something that I didn't like very much about the market was the volume. So I think today's volume bar is missing in the product, but if you draw a line over here, that was similar to yesterday's session. Today also it was very close to yesterday's session. So yeah, overall, if you see, the volume was a little lower than what you want. So this volume was very good. I think when there was a rebound in this session, but I think for the next 4 sessions, the volume is relatively lower than what you want, because generally whenever there is a bottom formation in the market, you want it to form on a high volume, and that's always convincing. The high volume bottoms formation is always good. So that's the one thing you need to note. Now, few things that you want as far as the technicals are concerned in Nifty. Firstly, what I am looking for is number one, holding 50 and 200 DMA. Okay, that's number one, holding 50 and 200 DMA. Number two, in case after a continuous 5 session of rally we get a pullback, then the 21 DMS EMA has already started to rise higher. Okay, so you want support around that level. So if you see currently it's a bit deep, but I think on Monday it will already move higher. So somewhere around 250, that's the last stop that I'm looking for, because below that the selling might intensify. Okay, that's the second thing. Third thing what I'm looking for is 21 is already moving higher. Now you want 50 DMA, that is the red line. The red line is the 50 DMA to move higher. So when I say move higher, if someone you might have not got it, see, let's say on March 20, 50 DMA was 17,694. And as we moved higher, it is going low, right? So on March 31st, it was 17,557. Now, as of today, it is 17,511. So you want this to move higher. Sorry, 522. Let's say from Monday, it's, or you can say the next week, somewhere in Tuesday, Wednesday, it starts moving higher from 17,522, let's say 540, 550. Then that is a very positive sign. जब भी 50 DMA ऊपर जाना चालू करता है, ठीक है, that is a very positive sign. So 21 EMA already started to move higher, just a flat today, but I think in the next week this might happen. So these are the key things to watch out for. The other things I need watching out for is the stocks. So I think the Reliance closing just around 50 DMA. HDFC Bank is attempting to break out. So I will just show you a chart and a clear disclaimer, guys. This is not a investment advice to buy or sell. This is just for the knowledge sharing purpose. So see the Reliance chart, if you can see, it was just above its 50 DMA closing. So you want this level to hold and move higher from here. The other is the HDFC Bank, very strong chart. It looks like if अगर last के दो session देखोगे, high volume पे day high पे close मिला है and it is just 2% upward. So you want this to break out. So when the leading stocks are delivering, when your leaders are delivering, so you guys might be very actively watching IPL, some of you might be. So your top order should deliver well. I think the player on whom you are betting up should do well. The opening should do well. Your captain should perform well. So these are the captains in the market. These are the leaders in the market. And if these guys perform, the rest of the market will follow, and there are high chances they might follow. Okay. So this was technically on the Nifty's front. Now, few things today. RBI policy. So one event is over, right? Now in next week we have a major event that is coming up, that is the US CPI data, and it's coming on 12th. So that will be very important. So the CPI data plus 12th April को ही CPI data के साथ साथ उनका minutes of meeting आ रहा है. जो last Fed का meeting था, US Fed last meeting, the minutes of meeting will be out on that day as well. So those two events, those two scripts will be very important for the market to study. Because see, Fed is very clear that we will go data driven. अभी market में uncertainty ज़्यादा है, कभी ना कभी कुछ आ जाता है. So couple of weeks back, you might be looking at this bank thing in the USA. Then a week after that, the Credit Suisse thing, and the things were stabilizing a bit. ऐसा लग रहा था कि अभी market वो थोड़ा बहुत पीछे छोड़ रहा है for a temporary period. तो ये OPEC plus ने cut कर दिया कि भाई हम लोग crude production कम कर देंगे, led by Saudi Arabia. So this is how the things are going in the current market. Lot of events, a lot of news coming out. But the most important thing, as O'Neill always suggested, do not go with the news, go with the charts. So अगर Nifty का chart सही है, the stock that you are holding, the stock that you want to buy, if these charts are well, okay, then don't worry. So it's something like if you fell somewhere, right, from your bike or while playing a game, and it feels, sometimes it feels a hurt, but if you go to doctor and get an x-ray and you see that there's no crack, then there's nothing matter to worry, right? So charts are nothing, but these are just the x-rays of the market. So if they are showing the healthy sign, then you don't need to worry. So that's why it's important to not follow noise and cut the noise and follow the chart. So let's quickly take few sectors before we go to your questions. So Nifty Bank holding well above its 50 DMA, looks strong, but here also just a little below average volume. But yeah, overall the setup looks quite good for the Nifty Bank. Especially leading is the HDFC Bank. I have already shown that chart. So if it continues to lead, then I think the others might also follow. But what one good thing about this chart is, see, multiple times it had attempted in January, then in February, then in March, 50 DMA. The red line reclaim नहीं हो पा रहा था. But finally in the April, we are able to reclaim that red line, and not just briefly, but a couple of sessions, two more sessions we have traded above the 50 DMA. So this is something positive setup as far as the Bank Nifty is concerned. So here also the most important level is the 50 DMA, that is 40,650. So somewhere around 40,500 600 का zone है, वहाँ पे support मिलना चाहिए. If Nifty Bank is able to hold that level, even if there is some minor downward pullback, then also that's fine. But ideally now the 50 DMA should not breach. Okay, if we look at the IT, the result season will be starting next week, guys. So according to O'Neill methodology, we always try to move a bit away from the stocks that are having a result in a week or so, because that's very unpredictable. So you are not into the game of gambling. It's very unpredictable to take your position just before the results. So according to O'Neill, you should wait for the result to come. How are the numbers? What is management commenting? How is the future growth perspective? Then and only then you should go for that stock. So most of the major IT stocks might report, I think before the 15th only, the TCS, Infi, Wipro, they will start reporting the numbers. So let's see how it behaves. So now the IT index is still 2 to 3% below its 50 DMA. So first thing you need to look for is the index should reclaim the 50 DMA, and then the next step to watch out for is the how the leading stocks are behaving in that sector. So overall expectations, if you see in the IT sector, that's not too high for this quarter. Uh, the focus will be more on the commentaries, that how is the order flow, what is the outlook for the next year, that is the FY24. So the revenue growth targets, the margin estimates for the next financial years will be very important to watch out for. And I think after this banking saga in USA, this Silicon Valley Bank and other small banks going through a tough phase. So almost 30-35% of India's IT services revenue comes from the BFSI sector in USA as well as the Europe. So अगर यूएसए यूरोप के बैंक्स में प्रॉब्लम है तो वो 30% जितना रेवेन्यू है बीएफएसआई में, उसमें कितना इम्पैक्ट आएगा? Will they cut the technology spends? Will it remain constant? या फिर वहां पे कुछ टेक्नोलॉजी इंप्रूव करके वो लोग कॉस्ट कटिंग करेंगे? So that is all you need to watch out for in this time's result, and that's very important to look for. So if you look at the FMCG, mainly driven by the domestic consumption, looks very robust. So there's no much issue with the urban consumption, and that's doing well, and that's what getting reflected in the Nifty FMCG's chart. But still the rural consumption needs to pick up. There is a bit lag in the rural consumption to pick up, plus the monsoon uncertainty. So last week it had came that a huge amount of wheat crop got destroyed due to the unseasonal rains. Many other crops have also affected, and there are possibilities of El Nino this time. So let's see how the weather department comes up with the report. So that will also impact some part of the market, because uncertainty in the rainfall in this period especially. So what is our strength currently? अपना इंडिया का strength है consumption. कि domestic consumption is robust, the domestic investment, government की side से capex अच्छा है, ठीक है, the infrastructure spent by the government is really good, the domestic consumption is good, inflation थोड़ा control में है क्योंकि food में अभी इतना spike नहीं हुआ है. So one thing which helped India last couple of months was the oil price. So oil price में dip आया था, and the range was now coming to 70 to 80s. So वो range में हम थोड़े comfortable हो सकते थे, but again due to this OPEC plus production cut, वो range अभी 70 to 80 से 80 to 90 के around shift हो रहा है. So that's again adds to India's inflation. So let's see how the monsoon goes and what are the prices of the crops that are getting. So that will be important to watch out. But otherwise, the FMCG index looks really good. So if the market rallies from here, then these are the strong sectors, and that these might continue to move higher. So metal still not able to come in the flow with the markets. It is still moving a bit sideways on the lower front. So the metal index is one of the underperformer. So IT and metal, so these are the index underperforming. Now, if you see auto, the auto numbers this time was a bit decent. There was no major issues with the number. For most of the companies like Maruti, Tata, the numbers were okay. The two-wheeler still a bit sluggish due to the low rural demand. But yeah, overall scenario is okay as far as the auto stocks are concerned. So over here, index is trying to move higher. So the last 3-4 sessions have been good for the auto index, but it needs to reclaim this 50 and 200 DMA, which is still 2-3% below the current level. So the levels to watch over here will be the 50 DMA and the 200 DMA. So now let's do one thing. Let's go to your questions. And in the meantime, if some sector is required to discuss during the questions, we might do that. So you can post your questions in the chat box. So we have in the room with us Mayuresh Joshi, Head of Research. My colleague Vakar as well as Rajshekhar are also in the room. So we will try to answer as many questions as possible, and we will take it on random basis. So that's not something that we target some questions, we want to miss some questions. It's not like that. And please do not keep repeating your question, because then the chat box becomes a junk and it's difficult to scroll as it's a live session. So please post it once only.
Rushit, Vakar, can I take some queries?
Yes, sure, you can start.
Yeah. So, Rushit, can you give me chart for Ramkrishna Forgings, then ABB? Whatever order is fine. So again, like if you look at it from a technical perspective, today's move, very good one. I mean, what Rushit was probably discussing, that when an up move happens, the up move should be on above average volumes, and that is what we saw from this Ramkrishna Forgings. If you talk about a new entry into this stock at this moment, it's not probably advisable. It's more near the profit bookings level. If you consider that green bar, like that we always say that blue bar is the ideal zone for entry. Red zone is your stop loss levels, and green zone is your profit booking zone. And we, I mean, as Olni always says that partially book your profits around the 20 to 25% levels, and probably someone would have entered at the right point, then can book out some of the profits, or trail the stop losses. And any new entries into the stock is probably not advisable. Overall, considering your ratings and everything is very good. I guess even the institutional holding is rising for the stock. Can you just show? No, it's not. So that is an issue. So I mean, considering that so not that big a number, like 47 to 46K. So that's not big a number, but considering you are in that ideal profit zone, booking zone, and markets can come up with certain shocks, or not shocks, but uncertainties, considering the macro environment across the globe, where probably US CPI inflation numbers will be out, your non-farm payroll data, that is your jobs data in US will be out. Anything can lead to a shock. And so it's ideal to probably book in that ideal zone, at least partial profits. And that's the way forward. The other we'll like to discuss is ABB. So again, a stock riding on the infra story in India. I mean, look at the rise in the number of funds. I mean, 70.45% on a big base is still very good. I mean, and the stock is forming a cup with handle base, trying to break out, and it's trying to break out on good volumes. So I mean, when you see on the left hand side of the cup, just apart from that one big red bar, there is no red bars going above your 50 your average volume bar, so that, which is always a good sign. And looking at the qualitative aspects and the result front, the last 3 to 4 results, or maybe 5 results for the company has been superb, and similarly can be seen in the EPS rating as well. Your RS line was hitting new highs. Your buyer demand for the stock is very good. Is now is just, uh, I mean, people who have been following our mailers would know that, I mean, we've discussed about the buy switch, and even Rushit would have discussed that your leading stocks are able to fire at the moment. Plus, your Nifty is above the 50 DMA line. So if Nifty is able to hold above, and then if the stocks break out, then definitely is a stock to be kept in your watch list, considering the overall fundamental, technical, and from the O'Neill perspective as well. The other which we can discuss is, I'll try not to miss out on stocks. Go up, 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 up. NCC, take NCC. So again, a very good story from a fundamental front, but I mean, new entry into the stock is probably not advisable considering the stock is 13% off pivot. So great choice of stocks, guys. I mean, the stocks that you're choosing in terms of from the O'Neill perspective and your fundamental perspective, all the ratings are superb. Plus, your fund holding is increasing. Everything for the stock remains good. Someone who has probably invested or has a position into the stock can keep holding the stock and probably keep your 21 DMA or the 50 DMA considering your risk appetite as your stop loss levels and trail them as the stock moves higher.
I'll take few queries now, Vikas.
Okay. Yeah.
I'll start with RVNL. Vikas. This stock is looking very good in this current market. Is currently trading in a double bottom stage 4 base pattern. Technical and fundamentally, the stock is very good. You can see the ratings. EPS of 94 indicates a very strong company on the fundamental front. Technicals have also been very strong for the company. The company has, after breaking out from stage 3 consolidation phase, it has given very good return, nearly for 50-60%. This is in November area, after which the stock started to consolidate, and when the market came down, this stock also came under slump kind of profit booking, but it was resilient when compared to other stocks which have fallen 30-40% from the highs. And when the market is also in a rally attempt, and we are waiting for a follow today, and this stock is poised very well at the current moment. It is forming right side of the base pattern, and stock is still 10% to its pivot. As soon as the market gives a FTD, stocks like these will definitely will lead the market and will definitely a very good contender for addition. And if you have this stock in your portfolio, you can continue to hold it, and depending on the buy price, you can keep your stop loss. And for a benefit of everyone, 50 DMA, which is around 8%, and 100 DMA, which is 6.5% from current market price, those levels can be kept as a stop loss going forward. Next is Carysil.
Raj, there is one comment. Yes, and that's correct. We are not saying to invest in this. That the fourth stage, the third is not always okay, but fourth we never add a stock, and the fourth base. Third also we rarely do it. Otherwise, we are comfortable with first and the second bases only, whatever be the market condition. Third, if everything looks fine and the other parameters are okay, then and only then we go for it. But yes, fourth stage we avoid the fourth stage. And that's what Rajshekhar started with, that it's a high stage base, and it's generally not a good idea to go with the high stage base. Yeah, the technical ratings are very good. No two ways about that.
Yeah. Moving on to the next queries from Abdul. We have two queries, Carysil and Gulshan Poly. CARYSIL. Okay, it's a very small market cap company, nearly 1,600 crores of market cap. Stock has been in the downtrend momentum for the most part of the year. Starting from February, stock has found good buying, and it has reclaimed its moving averages. And recently, that is yesterday and today, stock showed very good price volume action. It rallied nearly 10% in 2 trading sessions, and volume was also above average on 2 trading sessions, indicating good amount of accumulation. But this is very early to say to go in this stock, we would like the stock to consolidate, and ratings wise, it is not looking very strong, even though the ratings are fair enough. But in this market, go with only high conviction stocks, which are looking very good on ratings wise, both fundamentally and technically. Price volume action also indicating a good breakout or good buying happening. Then only it is advised to invest. However, if you have this stock in your portfolio and if you are waiting for whether to hold or sell, you can definitely hold this stock because of good price volume action, and you can keep 200 DMA as a stop loss.
Thanks, Raj. There are a few questions from the YouTube as well. So let me take that. One is about the Max Healthcare. And the stock has given a breakdown. In fact, it was very close to its pivot, the third stage base it was forming. And after, just going just 1 or 2% to break out, it was. And then it gave a breakdown. And I think last week, yes, it reached its 21 as well as 50 DMA. जब market ऊपर जा रहा था, when market was trying to recover, it was moving higher. This stock had given the breakdown, and the breach of the 50 DMA as well as the 21 DMA was on an average volume. But I think after that, to 200 DMA ke around, the volume was high in the previous session, and that is yesterday. But today there was some sharp rebound from the 200 DMA. So let's see if the 200 DMA can give a good support, because see, overall the fundamentals as well as the other factors, the growth drivers are in place for the Max Healthcare. The average revenue per bed is increasing. They are doing capex. The capacity is going to increase. And if you look at the fund holdings, the number of funds have also coming into the stock. So almost 20% growth in the last quarter in number of fund holding the stock. Even the last couple of quarters, the results have been good. They are able to deliver well, and I think the expansion is also decent. So no two ways about that. But whenever we see that there is a technical breakdown, not a good idea to hold that stock and then turn out to be a long-term investor. I think someone's mic is on. So Raj, Wakar, can you check?
Nee, Rushit, this is Mayuresh. Can you guys hear me? Hello.
Yeah.
Yes, sir. Myresh, you are audible.
Yeah. Nee, I think the typical story with Max has always been the case that we tried to add it a couple of times, right, guys? Rushit Rachikri, if I remember it correctly.
Yes, in watch list for a couple of time, added once.
Yeah, and it's always that story with Max that if you look at the parameters on sheer comparison with the larger players, like players like an Apollo or a Fortis or even an Ara and Udale, on any of the parameters, you look at an average revenue per operating bed, you look at the average length of stay, you look at the ROC pre adjustments, post adjustments, any parameter, Max Healthcare stands out to be the best. It has got ample land. Anybody stays in Mumbai knows that it has got an expansion planned in Parla West. Asset light model expected to follow. Adding, not mistaken, not seen the latest presentation, but a reasonable amount of beds with 80% or more in urban areas, medical tourism in hotspots like Delhi, Calcutta, Bombay, Chennai, it is where it is present, but it never really delivers. So unfortunately, Max is one of those kinds which will never deliver on those points. But I think those middle players, right, in terms of the hospitality space, if they start making a good base, I think that is the space which can do very, very well over the next 2 years. I think most of these spaces in the larger cap names, Apollo, Fortis, Max to a large extent, have gestated their growth. Both in terms of return ratios as well as dynamics. So earnings might be stable, but for a lot of these mid-cap companies, if they have some price strength and they create a proper base, especially these mid-cap hospital stocks, all the new hospitals that they have invested in the last few years, I think that is now started to pay dividends and it will pay rich dividends going forward. So for any new hospital, I think the ROC's initial part of the few years is very, very low. And then it exponentially expands as they start maturing, more or less after 5 years of operations and even more after 8 years of operations. So most of these players who have expanded and have done this capex in terms of new hospitals over the last 5-8 years, they should start reaping the benefit. But again, I think the whole call is a proper base structure getting created. And once that is probably seen, I think these few of the mid-cap hospital stocks might actually show leadership position within this generic hospital space. That were my two bits. Rusha, you guys can pick.
Sure. There's a question on Apar Industries. So yeah, the stock is trading near its all-time high. Fundamentals have been really good. The ROE is decent, and if you can see the number of fund holding, the growth has been really good. Plus, if you focus on its business, so it's expected to grow well. Even the conductor segment business as well as the oil segment business. So these are the two main segments that Apar deals with, and both the segment and even the cables. So the Apar is also associated with the cable segment. There also the growth is expected to be really good. So I think most of the segment the growth expectations are really good, and even it has delivered. If you see over the last 3 to 4 quarters, the growth has been very good and it has delivered, and it's going for a multi-bagger run. So if you see the last 1 year, the returns have been excellent. Let's go to weekly chart to see. Yeah, see, after the COVID, the run has been really good, and recently it had formed a stage 1 cup base and completed, which was completed in June, and from there it's continuously rallying. Just once it breaches 50 DMA, otherwise it is trading above. See, every time 50 DMA is giving good support once it breached, but then it quickly reclaimed the 50 DMA, and now it's again moving higher. So this is again a learning. If you want to note down that whenever there is a growth stock having a decent fundamental profile, the technicals are good, it always try to find support at 50 DMA. हर बार 50 DMA पे support लेके वो rebound होगा, and that gives the additional buy point. So according to O'Neill methodology, एक बार अगर यहाँ पे breakout हो गया, मान लो यहाँ पे stock खरीद लिया आपने या फिर यहाँ पे miss कर दिए, then if the stock is moving higher, then doesn't mean you can't add the fresh position. So whenever it pullbacks to 50 DMA, 50 DMA पे pullback हुआ, rebound hua, you can add the position again over here. So it gave a few opportunity to add the positions also, but overall market conditions were really tough this year, and so it was very difficult to manage these multi-baggers. So overall the profile is really good. Currently it's extended from the base, and generally we try to avoid the stock that are extended from the base. So wait for a pullback to 50 DMA again, so which is just 23% from here, the 50 DMA. So either you catch up with the 50 DMA and look for the alternate buy point, और second thing is look for the fresh base formation. एक नया base यहाँ पे form होता है, और वहां से जब breakout होता है, at that time you go with the stock.
Rushit, I just had one question here. How far is it from the 200 DMA, Apar?
Yeah, it's extended around 72%.
So I think one more point that I'll just extend what Rushit is saying on the extended pivot point as well. Any stock, right? This is now stage 1, but if any stock has a extended run and it is almost 100% from its 200 DMA or a little bit more, I think it's more or less assumed that there might be some pressure points onto that stock. But historically, like with time and again mentioned, anything which is 100% from the 200 DMA might be succumb. I mean, it can succumb to profitable to a certain. So keep that point in mind. Sorry guys, you can continue. I think there was a question on KPIT. KPIT also had, since you are talking about stage 4 and 200 day DMA as well, we can also talk about KPIT because it did a stage 4. Even from a stage 4, it scaled around 25%, but then had a massive correction. One of the few ER&D companies which has done exponentially well. Its peer Tata LXI actually has underperformed significantly in the last 2 months. But to a large extent, I think KPIT's outperformance continued because of the numbers that they kept on posting. They had a very strong constant currency growth. EBIT margins were extremely strong. And even as this quarter's numbers start unfolding, a large part of the market believes that margin performance should continue because a lot of the wage stroke attrition expenses are behind us. A lot of the other expenses related to outsourcing in terms of office rentals have largely got discounted in the last 2 quarters. But because of wage hike, wage pressure, and attrition pressure not being there, margins should continue remaining robust for a lot of IT companies. KPIT has given a very strong forecast going forward. But I think it was a typical story of that stage 4, right? I think Dushit and Rajshekar will explain.
Thanks, Varesh. So I think base, can you please quickly show, this is a question. So yeah, the base generally it's two things, just giving a quick recap. It's numerical 1, 2, 3, 4, and then it's alphabetical. That's 1A, 1B, or 2A, 2B, 2C types of thing. So we have a learning article, you can look for that. But quickly saying, whenever the stock moves 20% higher from a particular base, then it's numerically increased. That's from stage 1, 2, 3, 4. राइट अगर फोर्थ स्टेज है मतलब हर बार ब्रेकआउट के बाद ये स्टॉक 20% बढ़ा है द स्टॉक हैज ऑलवेज grew more than 20% after every breakout. So now if the stock forms a fresh base over here, it will be a stage 5 base. But if the stock is up just 5-6% from the base and it is forming a new base, then that is 1A, 1B, 2B. That's how it works.
Rishit, I'll take few queries now. Usha Martin, starting with Prashant has asked about Usha Martin. The stock, following up with the base count, the current stock is has broken out from stage 6, which is a very rare case. This happens. Normally, stock tends to form until 3, 4, but stock forming stage 6 and breaking out from stage 6 is very rare. This shows how the stock has performed in the past. As mentioned by Rishit previously, the stock has already advanced 20% on 5 occasions. That is the reason the base count is numerically adjusted to 6. And this is one of the big winner as well in the last 1 year. There is no surprise there because it's pretty obvious. And on the stock, other parameters wise, even though the stock has less EPS, that is core EPS of 54, but the stock has been able to technically be very strong in the current market, and it has been very resilient. Very few stocks have broken out in the current market, and you can see even though the momentum was not there in the stock, but it was very resilient and it traded near its pivot for last 1 month. This is because overall market structure was not conducive for investments, and even though there was selling pressure in the market, this stock didn't succumb to selling pressure. These are the signs you should look for a stock if you are looking for strength in any stock. But being a stage 6 breakout, it's very risky to add. It's definitely it's not advisable to add this stock at this particular moment. But if you have this stock in portfolio, you can continue to hold and ride on the profits, and you can keep a stop loss near its moving average, such as 21 and TDMS. Next question is related to RBI decision. RBI has kept its repo rates unchanged at 6.5% in the today's meeting. Most of the street analysts were expecting a 25 BPS rate hike because globally US, Europe have been increasing interest rates, and India has also increased repo rates. This is to tackle higher inflation rates in the country. However, this came as a surprise from the RBI. But what it does to reality or the housing companies is that when the repo rate is increased, the cost of funds or housing loan rates will also increase. But as the RBI kept the repo rates unchanged, this is slightly giving a push to housing sector in India. Already there is good amount of growth happening because of opening up of the economy, and this is definitely a boost for infra-related stocks. That is the reason reality and Godrej properties have been in the limelight in today's trading session. And next is some Distilleries and Anupam Rasayan. This stock currently has broken from stage 3 up with handle breakout. Breakout was also very strong on very high volume. And on the number of funds wise, it is slightly lesser. It is 7. Normally, according to O'Neill, we look for a minimum of funds of 10 staying invested in the stock. Also, market cap is just 1,000 crores, 11 or 1,100 crores, which is not so high. On the return on equity wise, also the stock has negative ROE of 3%. So definitely not fundamentally a very bad indicator. So please avoid these kind of stocks. Currently, market is not looking very strong, and these kind of stocks are will be laggards going forward.
Thanks, Raj. Yeah, Vakaria.
Okay.
Achha, you take it, Anupam Rasayan, or you?
Finish Anupam and you can take the.
Okay, I'll take it. Yeah, I'll take this stock. Okay. So talking about this stock, I mean, the stock hasn't formed a base yet. I mean, in the last 1 year or so, if we look at it, and I mean however, if you look at the right hand side of this chart, I mean, the stock has been moving higher on above average volumes. RS rating is moving high, which is really a good sign. I mean, no direct entry into the stock would have been possible, but I mean, someone like probably looking at very aggressively in terms of understanding the business model, understanding the fundamentals behind the stock, could have taken an alternate entry when probably the stock would have reclaimed its 50 DMA mark, or maybe I mean waited and probably done it at the 200 DMA. Why? Because even a 50 DMA entry would have been very aggressive considering your moving averages line were going down. At this moment, a new entry into the stock is probably not advisable at all, and the extension from the moving average is not high. So considering if one would have taken an entry, I mean near the earlier lows, so then the taking the 21 DMA at this moment as a trailing stop loss line can be very good. Why? Because your 50 DMA is still very far. I guess the extension from 50 DMA is pretty high. I guess. So I mean, considering you're riding on profits and everything, so 21 DMA can be a good thing. The other we can look at it is L&T Finance. Yeah, L&T Finance Holdings. So the stock did try to break out. I mean, the breakout has not been successful. I mean, on the breakout day itself, so the volume was above average. But I mean, today's action was good when the stock probably reclaimed its 21 DMA and is trading around the pivot. But still, a few more sessions of heavy volumes and uprise moves is what is required. The last couple of results for the stock was also good, and you can see that in the left hand side corner, and plus your number of fund holdings for the stock is also improving. So it's probably a very good candidate at this moment. It's looking out for a re-breakout. So I mean, at this moment, if there a re-breakout happens for the stock, and plus your RS line starts moving higher, then can keep it in the watch list. But I mean, considering the setup and plus the financial space that it operates in, there are other players as well, probably forming better bases. At that moment, you can have a look at all of them in conjunction with one another. Is Bharat Forge discussed?
No.
We'll take Bharat Forge. Okay, I mean, very pretty similar if you look at it. I mean, the industries are different, but I mean, considering maybe because of the last two results and the anticipation of good results, considering the previous three results was very good, maybe was that the stock wasn't able to successfully break out. And post that, if you see RS line hitting blue dots or RS line hitting new highs, post that the stock has just been moving downwards, which is not at all a good sign. And even the red bars, when the red bars are happening, the red bars are kind of happening on above average volumes. So at this moment, not an ideal candidate considering the very poor EPS strength of 14 plus a very high distribution in the stock as well. So maybe the stock needs to do, I mean, do a lot of legs to probably come back into the ideal zone, probably from the Cancellum or the O'Neill perspective. Rushit, you want to take some stocks?
Yeah, I will take AB Capital and Tata DVR.
Okay.
So the stock is forming a stage 3 consolidation base, and it is just 3% to pivot. So I think due to that, the last almost 6 to 7 quarters, the stock has been really strong, and the volume has been also high when the accumulation was good just before the 2-3 sessions. Even the RS rating is near the new highs. So blue dots in the last month, and it is very close to breakout. So overall, the fundamentals are okay if you look it on the consolidated base, and even the fund holding has increased in the stock. So let's wait for the stock to break out from the base pattern. But overall, you need to wait some 2-3% more to take the fresh entry in the stock. And on the flip side, I think the 50 DMA has been a very good defense line for the stock, just 1 or 2% here and there from the 50 DMA. So if the stock convincingly closes below the 50 DMA on a higher volume, then that's not a good sign for the further up move.
So Rushit, we can take Gujarat Ambuja export. Brajesh has been asking for it.
Sure. So
GAEL.
okay, I'll take it. So over here, if you see the Tata Motor DVR, so today the action was good. In fact, I think after the market only, there were some news that the JLR numbers were out, so that were decent. There was some 20-25% growth in the JLR sales in the Europe, and overall the last month datas were also fine for the domestic market. Some 3-4% growth in the domestic sales for the Tata Motor. So overall, not an issue. But yeah, overall, it is moving in a very sideways direction. It is oscillating around its 50 and 200 DMA. So the levels are not acting very convincingly as far as this stock is concerned. So over here also you see breaching of 200 DMA, again reclaim, not sustaining well, again breach. Now it's again just above its 250 DMA. So let's see how it reacts, but needs some more time to improve the technical ratings. The RS rating is very weak. And we have a lot of stocks in the market who is having strong RS rating, who are near the breakout, having a very good base formation, good fundamentals. So I think this stock might need some time to repair the technical damage. And number of fund holding has also a bit around 2 to 3% down in the last quarter. So give some time to the stock. Now, if you look at the GAEL's chart, Gujarat Ambuja export, it is moving sideways since last 3-4 months, and it is just below its 200 DMA. The black line over here is the 200 DMA, and the stock is just below it. यहाँ पे 260s में जब भी stock आता है वहां से घूम जाता है. So it attempted to move about that 255-265 zone thrice, but every time it is not able to move about that level, which is very close to 200 DMA. The second thing over here is the 50 DMA, and this is similar to what DVR was doing. It is oscillating around 50 DMA. So whenever it reclaims, it stays about that level for few sessions, or whenever it breaches, it stays below that level for few sessions, but there is no much progress. नीचे में 225-230 के अराउंड सपोर्ट मिल रहा है, ऊपर में रेजिस्टेंस मिल रहा है. सो गिव सम टाइम, अगेन लेट इट ब्रेक आउट अबव इट्स 200 DMA. या तो कोई बेस स्टेज फॉर्म करता है कि लाइक स्टेज 1 बेस इफ इट फॉर्म्स ओवर हियर एंड ब्रेक आउट. Plus, you can see the relative strength is weak, so try to avoid these stocks. And the results have not been convincing for the last couple of quarters. So need some good result plus a good management commentary and a base formation. So once you get these things, you can take fresh entry. On the flip side, look for this down level. If you are already holding the stock 220-225 wala, if that is breach, then there might be a sharp fall further, which is possibility.
Rushit, I think we should quickly take a few small cap stocks which have been asked. One is Banswara Syntex by Ankush. The other one is by Ankush only. We just asked that. Supreme Petro, and we'll take Pennar Industry.
Okay.
So we'll complete the entire small cap thing, and then we'll go to the capital goods part. ABB and Cummins.
ABB we have already discussed, I think.
Then we'll go to the small cap one, Supreme Petro, Banswara Syntex, and Pennar Industries.
Okay. So Supreme Petro, around 7,000 crore of market cap. And if you see the similar structure to what we discussed in the GAEL, I think there's no much change in the chart pattern. It is below its 200 DM, and in fact, the more attempt than the GAEL's chart. So almost last 6 to 7 months, similar thing happening. 400 पे अटक जाता है, 399.75, 399.5, 400, 399. Every time at this level, it gets resistance. The supply comes, and every time around 340-50 zone demand आ जाता है और वहां से rebound होता है. And similar structure, 200 DMA, the stock is not able to move above the black line, which is the 200 DMA level, and it is oscillating around the 50 DMA level. So you need to give some time over here, let the fundamental strength improve and the technical damage repair. Then and only then you should go for these stocks. And if you are already holding it, then that's a very tough market, for these kind of stocks. Anytime the accident happens, any morning it can happen. So it's always, prudent to keep a stop loss. I think risk management is very much important in the small cap stock, not in the small cap, but any cap stocks or the index. Then we have Pennar Industry. So the stock just broke out from the stage 5th base. It's a very high stage base, and generally not advisable because the fall from these bases are too much, like the intensities. We just saw the example of KPIT, which Mayuresh explained. So over here, the stock is out from the zone and it is trading near to its buy zone, but it's a high stage base, so need to be very careful. The stock is almost 11 to 12% above its 50 DMA. So यहाँ पे इस स्टेज पे अगर कोई इन केस लेता भी है, अगर 5th स्टेज इग्नोर करके भी, तो भी स्टॉप लॉस बहुत डीप हो जाता है 50 DMA 12%. Overall, the ratings are good, no doubt, because it's forming a stage 5 base and it continuously moving higher. So RS ratings, the other ratings, the number of fund holding the stocks have been improving, and last few quarters have been very good for these stocks. So the improvement in the fundamentals.
I'll take a few queries, Vishit.
Sure.
Cummins, India. It's a very good stock on one front. Stock has very good set of ratings, both fundamental and technical ratings, showing good character. The stock has broken out from its stage 3 flat base recently, but there is lack in momentum going higher. That can be attributed to the general market, which is not in overall movement on the higher side. Otherwise, the stock is very resilient in the current market, and it has a good support at its 50 DMA as well. If you closely observe today, it reclaimed its 50 DMA. The volume was also almost nearly average volumes. So a positive sign on price volume action. Overall number of funds wise also there is a significant increase, nearly 14% of new funds have invested in the stock in the last quarter. And ROE 18%, EPS of 87 indicates a very strong fundamental company. Technicals have also been very good. The stock has also formed blue dots in the February to March period. You can see on the chart which is highlighted. Overall, the stock is holding up in the current market, and when the market improves and the Nifty gives a FTD, definitely a very good contender for leader. Going to next stock, Mahindra.
There is one more that I had to discuss, but I just missed it. There is Banswara Syntex, so we can just take it, or maybe it's a very small cap, guys, right? Just 449 crore. And at O'Neill, we always look for the stock which are having a market cap of at least 1,000 crore, and the fund holding is also very less. So it's a very small stock, and we generally try to avoid these kind of stocks. So let it, get some good market cap, and then when it comes to our radar, we'll discuss.
Yeah. Thanks, Rushit. Next, Mahindra CI. Part of Mahindra Group stock has done very good. The last quarter, that is Jan to March, it has ended very good. But after peaking out around 460 levels, there is a significant selling happened in the stock, and it retraced back towards its 100 DMA. It reached its 50 DMA. The stock is still holding above its 200 DMA. This is because of huge rally the stock had previously. But there is no proper base pattern now. The previous base will not hold at the current moment, and it needs to form a new base pattern. But the EPS is very poor, 17. It's almost very lower. We do not ideally go with these kind of lower EPS ratings. This is majorly because for the quarter, December quarter, the stock has reported losses. You can see negative EPS. But technicals have been holding up, even though there was profit booking and selling pressure recently. Price strength has not deteriorated much because overall market is under pressure. So that is the reason the price strength is not deteriorated much. But we would want the stock to report a good set of numbers for the March quarter. Then there might be some improvement in the EPS. And we need to wait for the stock to form a base pattern as well. So now it's a wait and watch game in this stock. If you are holding, you can keep 100 DMA, which is 6% from current market price as a stop loss. Okay. Next is Action Construction. It is another very good story in the related to automotives manufacturing. The stock has broken out from its stage one consolidation, and it has found good buying, followed buying after breaking out, even though there was some volatile moves here and there, but overall trend is on the higher side. And if you look at OH, which indicates overhead supply, it is just off ice, which is just 1.6%. So it is almost near all-time highs, which is a very positive side. Market is still trading near its 200 EMA, but this stock was making new highs. Definitely a very positive sign on canceling freight. Ratings wise are also indicating the same. EPS of 95 indicates a very strong fundamental profile for the company. Technicals have also been stayed very strong because the stock has been outperforming a majority of the stocks in the market. So overall, the stock is looking very good on one front, but there is no proper buy point at this moment. And if you are holding this stock, you can keep a stop loss related to your buying price. And if it comes to again pivot, then that might be an exit point again.
Thanks, Raj. I think we'll take a couple of queries more. And so VBL, there is a lot of questions about the VBL. So it broke out from the stage 4 base, and it has been the multi-bagger of the year among the top gainers this year. And see, what's going well with the VBL is the territory expansion, the way their market share is expanding. Plus, बाकी FMCG companies में क्या हुआ है कि it was a price-led growth, right? In most of the FMCG companies, in the last couple of quarters, due to price increase, there was a price-led growth in the revenues. But I think for ITC and Varun Beverages, these are the only two companies in the FMCG space, majorly among the leading ones, that are having the good volume growth as well. So Varun Beverages is among them, and consistently good sales growth plus the earnings growth. And look at the ROE of 29, and there has been huge accumulation by the funds. So almost 60% of number of funds increases there, and the number has reached to almost 789. And if you take full year, I was looking at it, the number of fund holding has doubled. So this is just the last quarter, but overall अगर last year का ले ले, calendar year 2022, तो उसमें fund holding double हो गई है वरुण बेवरेज की. So when the good demand comes in, the price always tends to move higher. But currently it's a stage 4 breakout, a little risky bet to play. But if someone is already holding, then as Rajshekar discussed, 50 DMA, always a good stop loss for these kind of stocks. So it's just 7% from the current price. And if and 50 DMA has been a good support many of the times for the stock. So if you look over here when it was going higher, so you can keep a stop loss around 50 DMA level. A fresh buying from the high stage base is not advisable according to O'Neill. Last two questions. One, let's take Neuland Lab. A good technical setup. It broke out today from a stage 1 consolidation base. The fundamentals have been improving since last few quarters, and the accumulation on the right side of the base is very good, especially after the forming a low in the February. The accumulation that happened in the right side of the base. So if we divide it into two, that is left and right, from where the bottom was formed. So look at the volumes. The volume was very good during the accumulation, especially breakouts से पहले भी काफी अच्छा volume था. And look at the down days. Down days पे I think ऐसा लगा volume ही नहीं आ रहा था. Just 10-12,000 stocks were getting traded on the down days. So that's a very good setup as far as this stock is concerned, related with the manufacturing of the medical substances and the pharmaceutical antibiotics. So overall, it's a good story. Plus, the technical setup is good. The RS also new high blue dot. But wait for the market to give you a confirmation to turn on the buy switch. So ideally, we are above the 50 and 200 DMA. But what I discussed in the starting, the volume was not that convincing for the markets, and a lot of events, breaks, the 3-day continue break in the market, and so that's why we are trying to push to switch on our buy switch a bit later. So let's see if on Monday, if we get a good move in the market, then we might turn on the buy switch. In fact, even today, the Asian markets were what's stopping us. So two things that stopped us today from turning on the buy switch, even when the market is above key moving averages. One is a little bit lower volume, especially on the F&O expiry date. And the second thing was the Asian market was trading 1 to 1.5% lower, the Kospi Nikkei index. So that was stopped us from turning on the buy switch. But yeah, whenever the buy switch is on and the market is in a good shape, the setup for the Neuland Lab looks really good. You can get the recording of this meeting on the YouTube. It's available. We are live over there. So let's take a last question, Aptech, and then we close today's session.
I'll just take a query after you finish, Rushit, on the RBI policy. So there was a question on that.
Okay, so Aptech broke out today from a stage 1 base. It's a very clean breakout, and it's already moved above its the ideal buy zone. थोड़ा उससे ऊपर बंद हुआ. यहाँ भी अगर देखें तो राइट साइड ऑफ द बेस बहुत फास्ट बनाया है इसने. What I was discussing. Just a second, yeah. So if you divide it from bottom, the L and R, left and right. So right was very fast. In fact, in just 2 sessions after it reclaimed its 50 DMA, it had moved to a fresh high and broken out. And the volumes have been really good in the last 3 sessions. And it was low when the stock was forming a bottom. The volume was not low, but ultra low volume. So this is something good. A very good base setup. Fund holding decent. थोड़ा छोटा है stock, 1600 crore का market cap है. But overall, the ROE has been excellent, and the recent results have been really, really good for Aptech. So these are the stocks that needs to be in the watch list, and whenever the market gives a signal to buy, these are the stocks that you need to watch out for, whose RS is at a new high and breaking out of a early stage basis. So what do you, Akar?
Yeah, Rushit, I guess Mahresh wants to take, just a cue on the RBI note.
Yeah. Thanks, Rushit. Thanks, Vakar. Thanks, Rajshekar. So there was a question particularly on the RBI policy and what kind of an impact does it have on PSU banks. So two things. One, from the policy statement itself, the governor made it very, very clear that he's pausing only for this policy. Now we gave a lot of high frequency data indicators during the speech, and he also indicated that the GDP growth is expected at 6.5%, which is very, very good considering how the globe is expected to play out in terms of recessionary trend for the better part of the year. Along with that, he pointed out that inflation should settle down around 5.2, 5.3 odd percent. And therefore, there should be moderation in inflation from the above 6% levels that we are witnessing right now. It's a calculated move because the next policy is a couple of months away. You've got a Fed policy meet in between that. You've got a lot of data points which will come in from the US, specifically on the inflation front, on a lot of macro data points as well, including the Carysil index, the unemployment data, so on and so forth, which will definitely give a trend in terms of all the hikes that they've taken in the past and the indication that is happening that it should start moderating in the next few months as far as the US and the European economy is concerned. As far as the Indian context is concerned, what I have seen historically, being in the market for a long, long time, that rate hikes to a certain extent as a tool used by the central bankers, used by RBI also. In the Indian ecosystem, I think an exaggerated rate hike cycle on the upside does not really work. And that is what I have observed, frankly, from my point of view, my observation of the last few decades. Because the Indian ecosystem is skewed and positioned in a very unique manner. Will that hamper growth if we keep on hiking rates to a certain extent? It might, and therefore it was a calculative move that the governor probably did at this juncture, assuming expecting that the worst of inflation is over. He also mentioned unseasonal rains. He also mentioned the outside risk in terms of an El Nino impact. And therefore, he's kept this entire aspect open. And therefore, I think it all depends over the next few months in terms of global macro and the local vagaries of both the weather and the agricultural output. The Rabi output is expected to remain robust. What happens to Kharif will largely depend on how rains play out. But again, the next 2-3 months will be a defining factor in these circumstances and aspects and facets of what we talk about. The impact on banks, what has largely happened in the West, is an asset liability mismatch. Will that scenario play out in India? Now, two aspects here, right? A large part of our Indian ecosystem is based on retail deposits, which almost account for 69-70 odd percent of the entire banking system per se. When you're probably looking at the advances part of the book, I think a large part of those advances are very well managed over the last few years. When it comes to investing in government securities, the mandated requirements that have probably taken place through RBI guidelines, both in terms of the cash reserve ratios that are required and the statutory deposits that are probably required to be held on in terms of bonds and securities. To that aspect, the figure is anywhere in mid-teens for the entire system as a whole in terms of the holding for G-Sec stroke bonds. Now, does that pose a huge risk? I don't think so, because to a large extent, if you divide that in the HTF, which is held till maturity, and the AFS, which is available for sale, a large portion of that needs to get adjusted, specifically the HTM portfolio, which saw the crisis, emanate in the US market because of the sheer mismatch that happened in terms of the rate differentials. And therefore, I think in this scenario, I think the provisioning that the banks might do might have certain impact on the treasury book. So in these numbers, the more important aspect is not related to how much of an impact will the core banking business have. Advances should be reasonably okay. We've seen a lot of updates coming from a lot of banks, Federal Bank, CSB Bank, HDFC Bank as an example. Deposit growth also has been reasonable. But I think going forward, deposit growth has to catch up in terms of managing the advances book to a large extent, because unless that happens, to manage NIMs will be a little bit difficult and NIMs might moderate a tad bit. For the PSU bank, apart from all this, as I said, the treasury book, there will be a little bit of a hit as far as the HTM portfolio is concerned, because the yield movement in the Indian context was also there, if you talk about the global context as well. And therefore, I think there might be some element in terms of treasury losses which can come through, but these are again provisional because the HTM book is held for a pretty long period of time. And the context in terms of the ALM mismatch is not at all horrid, like we've probably seen for a lot of the big cap and small cap banks in the US scenario itself. So numbers are going to be interesting. So I think let's see how numbers play out, specifically for the small mid cap PSU banks. Even the larger ones like an SBI, PNB, Bank of Baroda have a significant portion in terms of the retail holding. So what kind of a reporting number probably comes through will be very, very interesting to watch. So these were my two takes on the policy and for the sector as a whole. With this, I think we'll wrap this up. Thank you so much for attending. We hope to see you soon again. Next week will be the TraderSmith discussion, and a couple of weeks down the line, the buy switch, as I said, is, as Rushit explained, is very much on. We're just waiting for confirmation in terms of some volume pickup to get through, because volumes is very, very important as per the ODL methodology as well. And therefore, the entire perspective in terms of these two aspects coming together will probably ensure that we start nibbling into the markets as and when these data points become very, very active as soon as Monday, if possible, is the hope. So thank you very much for attending. Have a pleasant evening and a great weekend as well. Thank you.